Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia, and it's a very familiar script that has been playing out with the markets. We're not falling, yes, but there is no conviction at higher levels. Yet again, an attempt to cross 25,000 and another failed attempt at that, at least for now, in the first couple of hours of the trading session. The mid-cap index also following a similar script at the lowest point of the day now is the mid-cap index, a 400-point cut from the highs of the day. So, cut on the mid-cap index. And of course, what is dragging the index lower? It's the usual suspects. Large IT names, Infosys, TCS, and large private banks, be it HDFC Bank, ICICI Bank, Kotak Bank, all of them are dragging the index lower. Infosys at the lowest point of the day, and HDFC Bank too has given up most of the gains, Vinny.
Absolutely. Good morning, Hormaz. And just looking at some of these sectors which are managing to hold on to some bit of a green today. Auto, that is doing well, right? So any of these auto names, whether you look at it, Maruti, M&M, Eicher, Bajaj Auto, all these are managing to hold on to good gains. And like Hormaz mentioned, today we're seeing IT falling. So it snapped its 3-day gaining streak. Individual names, IndusInd Bank on the back of a brokerage note. We had Trent that is gaining as well. They came out with their annual report, and that confidence remains of the management of achieving that 10x growth which they had set in 2023 in the next 10 years. So that's interesting to watch out for. Other retail name, Avenue Supermart, opening a new store in UP, the first one. So that's an important one there. But that's an interesting setup that is coming in for some of these retailers. So that's what we're watching out for in today's trading session as well, Hormaz.
Interesting. And some important developments came in last evening as well, with SEBI approving NSE's request for weekly futures and options contracts to expire on Tuesday. And BSE's proposal for Thursday's expiry has also been cleared. Now, to understand the implications of this, Prashant is now joining in the studio to take the discussion forward with Mr. Sundaram Ramamurthy, who's the MD and CEO of the Bombay Stock Exchange. Prashant, over to you.
Guys, thanks very much for that. Let's just welcome in Mr. Sundaraman, who's with us. Sir, good morning. Great to have you with us here. And thank you. You're joining us all the way from London. So appreciate it. So this is now finally settled. We have clarity in terms of which exchange has which day. You are, of course, moving from Tuesday to Thursday. I just wanted to start with, before we kind of ask you what the implications, etc. are, I just wanted to ask you, was this a consultative process in that sense? Because as we understand it, you asked for Thursday.
As you would, first of all, thank you for having me on your television. As you would recall, when the regulators decided the only one weekly expiry per exchange, an option was given to the exchanges to select their expiry days. NSE chose Thursday, and so therefore BSE at that point of time shifted it from Friday to Tuesday. When after that things were going okay, when NSE wanted to shift it to Monday and then wanted a unified expiry, consultation papers came and it was decided it should be either Tuesdays or Thursdays. Since NSE requested for Tuesday to the regulator, in the overall interest of the market, BSE decided to go with Thursday. Thursday is a good day, so we have gone with that.
No, that's fair enough. In the overall interest of the market, as you put it, I won't press that point too much, and we'll move on quickly. But just did you assess what could be what would happen if you stuck to Tuesday, asked for Tuesday?
What is the need? If somebody wants something, it's okay. In the overall interest of the market, we can take Thursday. Thursday is not a bad choice. Thursday has a lot of advantages. Since you're harping on this, let us talk about this. BSE gained market share when its expiry day was Friday, which is not a very ideal day. What we should recall is, at that point of time, every day there was an expiry day. BSE didn't have an option but to go for Friday, and BSE gained all its initial market share only with Friday as an expiry day. As I was always telling, if you have everyday expiry day, every product becomes expiry day product. The purpose of a derivative contract is not to create lot many expiry day products, to give a longer time horizon between expiries so that people are able to use the product effectively.
Sure.
That is the reason why when an opportunity came and when options of Thursday was taken by NSE, we took Tuesday. And we were, and we will ever be happy with Tuesday as well. And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day. In India, the entire 100% market share was gained with Thursday as the expiry day. So Thursday is a very good day. So, but notwithstanding all that, if somebody wants Tuesday, what is the point in not giving it and taking a better day?
Okay. No, point taken, Ms. Ramurthy. Let's move on. So what are going to be the implications? I mean, again, this is all very near term. As you said, you've gained market share consistently before the November options regulations, etc., were announced. And actually, even after that, you continued to gain share in that sense. But with this change now, I'm looking at various analysts who track BSE as a stock. All are penciling in different degrees of loss in terms of options market share. Could you give us your assessment? What would it be?
There are multiple points to be considered in this. When every day was an expiry day as well, as you rightly pointed out and as I mentioned, BSE was gaining market share. So is it possible for anybody to take only one contributory factor to the volumes, even presuming Thursday will reduce market share, even presuming, I don't presume it. Even presuming, is that okay for overall assessment? I don't know. Because there are growth factors, there are market-related factors.
Mr. Ramamurthy, if you allow me to come in, let's just, so keeping everything else constant, if I can put it that way, I know it's an unfair question and other things will not be constant. And I think we understand that there are various levers, but for a moment, keeping other things constant with this change of day, could you give us a sense of what could be?
You can keep everything constant, but life doesn't work that way.
Of course it does not, but I'm just asking, theoretically.
And as far as Thursday is concerned, I think I very elaborately told you how Thursday is a better day. Because beware, the entire 100% market share in the market was gained with Thursday as the expiry day. And there is a very great advantage of relative value trading between economies, which is what is happening today because markets are becoming global. Thursday appears to be a better and ideal choice.
So I mean, I would really appreciate a number, sir. You are about 24% share right now. Will you, once these things kick in from September, will you stay at 24? I'm looking, for example, at a Goldman note, which is saying that there should be a 3 percentage points hit to market share. Others are accounting for a little bit more. But what would you say, sir?
Multiple points. Has anybody, including you, have ever predicted that with all the analysis that you all have at your hands, that Sensex will grow this way? I don't think.
So
I don't think it is that easy to predict any market.
That's a nice throwback at us. But that's not the question, sir. You understand, right?
Permit me to reply.
Yes, please.
None of you predicted ever any of this, right? And secondly, I have clarified to you in your own studio multiple times that I don't run behind market share in derivatives.
Okay.
I am talking about deepening and broadening of markets. My effort to deepen and broaden markets will continue. We have targets in terms of how many brokers we should have, how many racks we should have, how many FPIs should be participating, what type of the premium quality should be there, how many products we should have. This is what we set as our KPIs and we work towards it. The purpose of derivatives should be served. Market share is a side outcome. Main outcome is economic value of a product.
Yeah. No, point taken. And by the way, nicely done, sir, if I may. But let me read out that one line, right? Which, there is that acknowledgement that there are other levers as well. I'm reading verbatim from an analyst note. It says, we now expect BSE to gain 0.5 percentage point share per month from September 2025 low to get back to the 24% share by March of 2026. So even those who are saying you will lose some share are saying, well, you will gain it back. It'll just maybe, it'll just take a little longer. That's all. So I think that understanding is very much there. But since you're not giving me a number, and I won't press on that point any longer. Could you give us a sense of, what actually your share was on, say, Tuesdays? What your share of volumes traded on Tuesday as opposed to Thursday?
See, it is not proper to compare it that way. I'll tell you the reason. Typically in India, on expiry days, the products trade more, and more so because we had introduced a culture in between of having an expiry day every day. We had one product expiring every day, so the products become expiry day products, and they tend to trade more on the expiry day. When we introduced Friday as the expiry, we were having you wanted numbers, so please take it. 85% of the volumes were getting traded on the expiry day, which is exactly what we were very concerned. Then it becomes nothing but an expiry day product. The moment we interspersed with days, Tuesday volumes became 45% to 46%. The remaining started getting distributed. Certainly, therefore, Monday volumes will be slightly more. It used to be around 30%, 25%. The remaining got distributed amongst days. I was not able to see any nearness to expiry giving some extra advantage on the days of volumes. I hope I make it clear to you. So clearly, expiry and expiry -1 have always been high, even when it was Thursdays and Fridays for BSE. Friday volumes were exorbitantly high because of the unfortunate culture of everyday expiry. When that everyday expiry went away and it became Tuesday, naturally and necessarily the concentration from expiry day came down, notwithstanding still it will have huge value. Theta comes down heavily on expiry day, so there will be greater volumes. And expiry -1 because of people taking possession. But the concentrations were not as before. I feel interspersing of the days of expiry is what is more important. That continues to happen with Tuesdays and Thursdays.
Sure. Actually, Mr. Ramamurthy, 2 points, right? I mean, Fridays, because there is weekend risk, there is that element to consider as well, right? So when we look at, these conversations about, well, NSE gains, BSE loses, well, I mean, it may not be as simple because should you count Fridays, is it going to be as large? Weekend, risks have gone up quite a bit. The other bit, of course, as people have pointed out, is that most of the algos, etc., have been backtested on Thursdays. So maybe they will need to go back and do that for Tuesday now. So overall volumes drop a little bit. Is that a possibility?
In fact, if you look at it that way, more algorithms would have been backtested for Thursday expiry.
Correct.
Because we are just very nascent. The number of algorithms that need to be backtested for Thursday versus number of algorithms to be backtested for Tuesday in a very new exchange like ours, our numbers will be fairly low. I don't think the day effect on market works anymore. Algorithms work multiple ways. So it may not be fully correct to say it has to be backtested. Some of them may require a fine-tuning.
Okay, got it. Just one more point in terms of your the number, and you always, last time also I spoke to you, you kind of talked about clients, right? Number of clients that you're adding on, especially in the derivative space. Where are you at now? And if you can give us some guidance.
Oh, I can certainly. See, we have around 525 brokers now. We want to increase it to 600 to 700. Our concentration is on foreign participants and brokers and racks and our technological capabilities. On brokers, I told you the numbers. On foreign participants, we have around 290 to 300 foreign participants today participating with us. We want to increase it to at least 500 over a period of time. That's why we try our best to meet people, convince them as to why India is a great destination. And once they get convinced of India, why BSE is a good place for them to look at. And in terms of racks, we want to go and increase by another 200 racks. We are working on it, and very soon we should be able to accomplish it. And in terms of product, we are working towards deepening the products. We don't want only this week volumes. Next week, next to next week, and monthly contracts, which are working well. Our efforts are giving us some results. We are working on also strengthening futures market, which we will double up because now the futures will become monthly. We are doing all these type of efforts to deepen and broaden markets. Honestly, that is what has brought us market share.
Sure. 200 plus, 200 more racks is what you're working on, right? Okay. By when? I mean, any
our idea is by the end of the current financial year, we should try to achieve it. You know, there are a lot of moving parts in all this because they are capex. There are multiple agencies involved. So timeline put us end of this financial year, we should have 200.
I'll just ask you one last question. This is not related to BSE, but you know, since you are also an exchange and a frontline regulator in that sense, you know, I don't know if you saw this recent story. I think it was the Ken which put out the invisible hand in markets. I mean, I think they were referring to this to Jane Street, but there are, you know, there's Jump, there is Citadel, all these players which now account for a large part of the volumes overall. You know, have you heard or has the regulator SEBI sort of can you tell us if they're looking at you know in a way unusual price swings because of what these entities are doing in the marketplace? Is there anything at all which is going on?
It's not. It's maybe it's a question to a wrong person. You're talking about regulatory intervention. You have to talk to the regulators to find out what they are doing. I'm a very, very beginner in the derivatives market. Volumes with me in respect of all entities that you talked about are all in very, very early stages.
Okay.
So right question probably to the right person, not to me.
Okay. But you've not been asked for any data or anything, right, in this regard? I mean, BSE has not been.
First of all, it is not fair on you to ask what regulators ask the regulated. That is between the two. And notwithstanding that, I have not had any inquiries from anybody on this.
Got that. Thank you very much, Mr. Ramamurthy, for, I had to ask you that, apologies, but had to. Thank you very much for joining us, and it's always a pleasure speaking with you. BSE, the stock, I think, is down about 1.5%, but I mean, you know, given the amount of noise, I mean, the stock actually is holding on, I would say, very, very well. Just about 35 rupees lower, 2,630 or so. We'll take a quick commercial break here. Hormuz and Vinny will take you through the rest of the program in just a bit after this break.
Welcome back. On to all things commodities now. After that candid conversation with the MD and CEO of BSE, Manisha is now joining in to talk about sugar, spice and everything nice. But prices are at a 4-year low, Manisha.
Oh, well, yes, this is the time if you have to consume more sugar. Well, yes, you know, internationally, we've seen the sugar prices continue to decline quite sharply. In the overnight markets, we've seen 3 to 4% of a cut coming in for sugar prices. So while in New York, you've seen the sugar prices now decline to a 4-year lows, the London sugar prices are trading at a two-week lows as well. Well, price for raw and white both have seen a decline of around 4% overnight. This is after the USDA report for the global markets in 25-26, which suggests that there is going to be a record production at around 189 million tons. The consumption is expected at a record as well, but much lower at 177 million tons. And when you look at the surplus going forward in the season 25-26, that is anticipated at almost 42 million tons as well. The USDA also says that they're looking at higher sugar production this time around from major producer countries. For example, Indian markets, while we did see a 26.2 million tons in the previous season, the next season could be looking at a 19% of a jump to 35 million tons. Not just India, if you look at Brazil, which is the largest sugar producer, by the way, is looking at almost a record crop of 44.7 million tons. If you look at Thailand, well, we are looking at higher sugar production here as well to the tune of 10.3 million tons. So higher sugar production, even as the consumption is rising, the production is rising way more, and that seems to be weighing on to the prices.
Absolutely. I think, Manisha, you need to start having more sugar now so that you see the consumption rising at that level as well. So, yes, that's something that I'm hoping you start doing because I'm eating a lot of sugar. I hope you do too. But thanks so much for that, Manisha. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss his top trading bets. Welcome back to Trading Hour on CNBC-TV18. Now we have Mitesh Thakkar joining in with us to give us a quick take on the technical front of the market as well as his top bets. Mitesh, good morning. I think yesterday also when we spoke, the markets were here around this 24,800 range. Today also around that level. What should we watch out for in terms of Nifty, Bank Nifty now, as well as in terms of overall your top bets?
I think I've been saying that we're possibly going through a phase of contraction and the markets might not give a directional view. In fact, most of the volatility suggesting indicators have turned flat, meaning that not much might happen. So therefore, we'll avoid trading the index though the broader contours are 24,500, 25,050. And on the stock side, I have a buy on RBL Bank. That's, stock is showing some traction on the intraday charts. So buy here with the stop at about 218 for targets of 230. While PFC is, REC is on the negative side. That's a sell with the stop just about levels of 400 for targets of 380.
Anything on Vari Energies, Mitesh? It's been on a bit of a downtrend. It was a post-listing high of 3,700, currently at 2,700. You may not have enough data on the charts, but if anything that you can spot.
Vari Energies is something, which has done. Post-listing has been in the news, but unfortunately not been tracking it because, as you rightly said, the amount of data available to me is very limited. So I'm not sure whether the chart makes sense immediately.
Mitesh, thank you so much for sparing time and joining us today. And we'll have you back towards the close of the trade with your ideas as well. By the way, the market has slipped slightly from the levels at which we started off the show. 50 points lower now on the index. The Sensex is now down 200 at the lowest point of the day. The Nifty Bank has slipped into the red as we speak. So that is also weighing on the index. The global markets do remain on the edge. The Dow futures are still up 20 points, still awaiting further action from President Donald Trump on the Middle East crisis. Take a short break. On the other side, market fundamentals with Jyotivardhan Jaipuria of Valentis Advisors. Stay tuned. Welcome back, and a bit more pressure now on the index. Now below 24,800, 75 points lower. In just a few minutes, the Sensex has slipped from 200 points lower to 260 points lower. So some more downward pressure coming in for the index. And just pull up the contributors before we go to Jyotivardhan Jaipuria, and that will give you an idea of what is actually pulling the index lower. We spoke about the IT names. We spoke about the large private banks that are contributing to the pressure on the index. There you can see ICICI Bank, HDFC Bank, Infosys, TCS. So all the index heavyweights are putting pressure on the index. And on the flip side, IndusInd Bank and Mahindra & Mahindra trying to fight for the bulls. But Jyotivardhan Jaipuria of Valentis Advisors is joining in now to take this conversation forward. Jyoti, good morning. Thank you for joining in. There's been a lot of conversation about these rising oil prices and the impact that it could have. A lot of experts have also said that structurally oil does not have any basis to hold at the prices where they are currently, because there is no demand per se, but it's only because of these Middle East crises that the prices have gone higher. But if this crisis prolongs for a longer period of time, say for the next 3 weeks or for the next month or so, will that have an impact on the Indian macro balance sheet and then have a cascading effect on the market as well?
Like one is on a very broad basis. If you look at all the wars or skirmishes we've had in the past 30, 40 years after World War II, the market has been nervous when that war started. But, as the war continued, people tend to forget about it. And, like if you see a 6-month return, 1-year return, it's always been positive and the war has not had too much of an impact. Here, I think, the market is more bothered because of the oil. Obviously, oil is one of the weaknesses for India. If you look at, before this skirmish started, things were looking great for India on the macro. Low current account deficit, low fiscal deficit, low inflation, easy liquidity from the central bank. So, a sustained pressure in oil would have, changed some of these things because your current account could go up, inflation could see some pressure. But overall, like you said, we don't expect like oil to continue to be higher for very long. You probably will have, if this continues for let's say 3 weeks and some of the oil fields get damaged or some of the shipping lines get blocked off, you could see some flare up in oil coming maybe for 2, 3 weeks, 4 weeks, and that could impact the market. It could impact short term, but I think typically this will die down after a few weeks. I don't think it lasts for more than 2, 3 weeks, and then you'll see oil coming back down because see, supply is still plenty, demand has been weak, and once this thing gets sorted, I think a lot of the other producers will start increasing oil prices. So I think, yeah, there could be a short-term impact on markets, and probably that is a good thing because after the rally, we were all looking for some excuse the market to correct. So in some sense, this is the excuse which you get, and then you have to use that to start buying back into the market.
Absolutely. Hi, Jyoti, this is Vinny joining in the conversation as well. Good morning. Does this mean that domestic focus continues to be the main area even for y'all, and that's where y'all will continue to look, whether in terms of company sectors as well?
Yes, so that has been like the focus for us for quite some time. And, post Trump and the tariffs which he's been putting, we've been cautious on the US economy. All said and done, they've not done as badly as we thought they would because so far inflation is still not coming over there. And we have the Fed meeting on Wednesday, but in general, everybody believes inflation is coming with the tariffs we put there, and that will start putting pressure on the economy at some point. So for us, it's largely been a focus on the domestic economy. There are some sectors which are more focused globally, which we've been nibbling into, where we think valuations have become cheap. So one of them has been the pharmaceutical, which keeps getting into focus because of the Trump tariffs. The second has been chemicals, where we bought a bit of stock.
What is driving this bullishness on the chemical space, Jyoti, since you mentioned that you've been nibbling into this sector? Because the last couple of years have been, if you could say that, a washout for the sector as a whole. The stocks have not done anything. Their earnings have been dismal. What's driving this? You mean to say that the sector has bottomed out now and then now looks attractive for a recovery?
Yeah, that's right. So, our philosophy that we use, right? We buy things which are undervalued, obviously, but more underperforming and underowned, where things have done badly and the focus goes off from the market. So for us, we track two things. One is on the very bad macro. Stocking at the dealer level was very high 18 months ago in the chemical space. And that stock level is progressively kept coming down. So now the stocking level has gone back to very normalized levels. So, that whole reduction in sales, because partly the dealers were destocking, has gone away. The second thing is, for a lot of companies, if you see in the last 2 years, earnings have been quite dismal. And so we think there's starting to be a bottom out of earnings at some point from here. We'll start to see earnings recovery because volumes will pick up, even if margins don't pick up. And valuations have relatively become okay. So one thing which we would have been more bullish if valuations were much cheaper than where it is today. Even now, I don't say valuations are super cheap, but there are some pockets which we found where valuations have become very reasonable. And where we think over the next 2, 3 years, if things go okay, then we can see earnings doubling. So, those are the stocks which we are buying a little more bottom up. But generally, the broad thesis is you've had a lot of destocking. You've had, 2 bad years for the industry in terms of earnings. and from here earnings will start to trend up.
Okay, that's the specific reason coming in for the chemical side. You expect the earnings to starting to trend up now, moving on from here, and then bottomed out. What about your thought coming in terms of overall, if you're looking at in any specific sector, would it be more on the large cap side of the companies, or mid and small cap is something that you would look at in terms of valuations right now?
It depends on sector to sector. But if we look at the market today, the way it's positioned, it's like, the large caps are the attractive space and we don't want to buy the small cap because they look expensive. And yet, if we go sector by sector, we find a lot of small caps or mid caps which are trading much cheaper than the large caps and where fundamentals are improving quite a bit. So example, if we look at banks, we like some of the large cap banks, but in banks, we find a lot of small cap banks which are trading at very attractive valuations. So we have a mix of them where we have the large caps also, we have the small caps also. Again, in the chemical space, a lot of them are mid and small cap companies, which we tend to like, which are doing very well. In capital goods, we have a bunch of small cap names which look attractive. Even now, they're not as cheap as they were 5 years back, but even now, just given where the earnings are going, they still, offer great valuation support. The other sector which we are bullish on, we've spoken of earlier, is the cement. So in cement, we think a lot of the smaller caps cement companies are much more cheaper and they offer more value than probably some of the large cap names do.
Since Jyoti was mentioning chemicals, I got reminded of Naveen Fluorine. There's another bullish note coming in today from Vendis, and a third bullish note coming in on Naveen Fluorine. So yes, some chemicals analysts turning bullish on the chemical space. But Jyoti, what about the capital markets space as well? The BSEs and the CDSLs. The one issue regarding the exchange, the weekly expiry issue, has now been put to rest for good. But now, does that mean that with this change in expiry, the changes that will come in, does that benefit a lot of these broking firms, the angel ones and the likes, the Motilal Oswals and the kinds, because of the changes and the incremental volumes that would come in?
Yeah, so our view is like, one is the long term is that these guys will do very well, because in India, investing in equity will keep putting up just as an asset class and people will trade more, and there's a lot more to be done. But given what we've seen in the last few years, we think there'll be a couple of quarters, maybe 3 quarters, where there'll be some weakness on a year-end basis in earnings, and probably that will offer a better opportunity to go and buy into some of these stocks. So ours is, we would prefer buying these now on weaknesses rather than buy these at current prices.
Okay, thank you so much, Jyoti Vardhan Jaipuria, for joining with us on the show, as well as giving us your insight in terms of the market, as well as the top sectoral bets in the market as well. But on that note, we're going to actually sip into a very short break, and on the other side, we'll be joined by the management of Happiest Mind Technologies. So don't go anywhere. Welcome back to Trading Hour on CNBC-TV18. We have the management of Happiest Minds joining in with us, Venkatraman Narayanan, the Managing Director, and the newly appointed CFO, Anand Balakrishnan, of the company, joining in with us to talk to us about that. Anand, firstly, congratulations to you. It's been one happy week coming in for you for Happiest Minds at the CFO position. Before we start with the conversation moving forward, what are your key insights in terms of your focus area that you have for the company? Next 12 to 18 months, what do you look at it in terms of the growth for the company? Overall, FY25, around a 26% growth that we're seeing. Where are you envisaging moving on from here on? What do you want to work on here? Anand?
I think let Venkat take this thing. Okay, sure. Hello. I'm relatively new in this organization. I will defer it to Venkat to take this forward, and then I'll answer the other questions as well.
Absolutely. Yeah. Venkat,
go ahead.
Hi, Vinay. Good morning. And yes, we are looking to grow into the next year. Last year, we came out of a decent year, 26% growth, like you rightly highlighted. It had a mix of both organic and inorganic growth. So we did reasonably well on that front. 2-3 years, we have shown compounded annual growth rate of about 22% plus our revenue growth. So it's fairly been a good 3 years. If you look at it post listing, we have kept on to that double-digit growth rate, and our endeavor is to make sure that we keep growing both organically and inorganically going into the next year, and meet, or at least make an attempt to meet that aspirational growth target of $1 billion by 2031.
Gentlemen, good morning. Thank you for joining in. Just one simple, I was reading about a note that came in a domestic brokerage note yesterday, and it mentioned that your inorganic growth plans, the inorganic acquisitions that you have done, will eventually start to fructify and will be instrumental in leading your growth and shifting your product mix towards the healthcare and the BFSI space. What are your plans are you guys doubling down on these two verticals right now because of the headwinds that you're facing in the EdTech segment? If you could share your rationale for that.
Sure. Early last year, we verticalized the businesses. So, EdTech was the lead vertical. Once you verticalized and you looked in future into the growth verticals that we needed to be in, obviously BFSI, healthcare, manufacturing, CPG, retail, these stand out. EdTech is something that we have been strong and we've been good at. But then the need to strengthen these other verticals was an imperative because, traditionally IT industry has grown consistently in these verticals. Acquisitions that we did nicely fitted into these verticals. So high tech, healthcare, and BFSI were the three verticals that got really, strengthened because of these acquisitions that we did. And we are continuously following up and building up on that trend to keep these three verticals growing. EdTech is something which has been traditionally very strong for us. But yes, there have been signs of slight weakness in that vertical, which we have shared with you in our earlier interactions as well. And, while we stand a very good chance to win any contract that comes into that vertical, the market itself has to be amenable to that kind of a growth aspiration from our side. So while all focus is on EdTech, we are also beefing up, or we are doubling down on growth of the other verticals, and this is towards keeping that double-digit growth that we had talked about the company.
Now, speaking of contracts, how's the deal pipeline looking like? Are you in talks? Are you in the course of winning new deals? What's the situation on ground currently?
While I can't speak to you about the quarter that's under progress, but we are seeing reasonably good growth in the quarter. Just to put it in perspective, last quarter we grew by about 1.1%. If you look at it in dollar terms, constant currency. This is despite, there was this fiasco that we had with one particular customer, which I'd covered ad nauseum. If you adjust for that one little mishap in our case, we did about 2.5% growth in Q4. It's been not the easiest of quarters for the industry. Now, coming off that, we are looking for a similar repeat of a similar kind of a number. In the quarter, we are seeing a good amount of existing business, falling in place, new business coming in from existing customers coming in. The deal flow has been good, I should say.
Right. What I want to also understand, Gen AI, right? Previously, you have spoken about, believe that it will break even by FY26, the Gen AI side of the business, and will be profitable in FY27. Anand, if I could come to you in terms of your overall thoughts for Gen AI, as well as how large do you think it can actually be as a part of the company's business going forward? And in terms of margins, how does that work there?
Again, as I said, it's just been barely 2 weeks into this organization. I'm kind of pretty much in an immersion in a discovery phase. Venkat, why don't you take this up and then I'll take it up later.
Yeah, I think Anand, the point here is, Vinny, Gen AI, we had set a target for ourselves to do about $5 million in the second year or the first year of our establishment. We were about 50% of that. That's what the number that we have disclosed for the last year. we are looking at a similar number, which is almost a 50% growth going into the current year, which is FY26. Last year, it was an investment year, and I had covered this in all my earlier calls. It was a low utilization year, it was a setup year, it was a startup within a larger organization. So all support, all hands on the deck to make sure that the business takes off the ground. We had multiple conversations, we have opened multiple accounts, all of which we have spoken about. But coming into this year, we are reaching a state of maturity where first is our utilization rate, which was about 35 to 40% in the last year, which should come up to the 60 to 70% range. That should nicely take us to a break-even point, which you rightly pointed out. And then it should, the trajectory should be one of growth going into FY27 onwards. Coming to what should be the size, that's peering into the future a little bit. I think for any business unit to stand out and gain traction and be relevant within a larger environment, when we are about 500 million, it should be something close to at least 5% of the total business. So what I'm trying to say is it should be about 25%, 25 million in terms of revenues in the next couple of years for it to really gain traction. But while I say that, I should also be careful to say that just like IoT was a business unit and then it got absorbed into the BUs or into the verticals as we went ahead, Gen AI also could get nicely intertwined into the business as we progress, and it could just get integrated into our verticals and horizontal offerings that we offer to our customers.
All right, gentlemen, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year, and Anand, wish you good luck in your new stint as well. We'll take a short break here, but before we do that, CNBC-TV18 Access, a premium membership-based service available on CNBC-TV18.com, offering members exclusive content, market intelligence, and expert thought leadership. And the membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits. Now, designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to cnbctv18.com/access/plans. Welcome back, and as we count down to this edition of a trading hour, we leave you with the markets near the lowest point of the day, below the mark of 24,800. The Sensex 2 down 245. The mid-cap index, though, is now down 300 points. So another sharp correction from the highs of the day, and it's the Nifty Bank that is dragging the index lower. But from Winnie, me, and the team that put this show together, thank you so much for watching. Halftime report on the other side.